The RBI a few days ago increased the repo rate in a surprise move by 40 basis points to 4.4%, taking the stock market really into a tumble. But what was the reason for this hike, and how does this announcement impact people like you and I? Here's the whole story. Now, before we go into what this means for retail investors and how this will really impact us, let's first understand what repo rate is. Repo rate is the interest rate that commercial banks are charged when they borrow money from the RBI. Right now, the repo rate is at 4.4%. That was at 4% earlier before the announcement. The announcement came in a couple of days ago, and a repo rate was increased by 40 basis points to 4.4%. Now, if you take a look at the chart on your screens at this point, you'll see what's really happened from August 2018, post which you'll see that there's a declining trend of the repo rate, and it's stable for a while, and now it's the first increase after August 2018. What happened soon after was the stock market plunged. The Sensex slumped 1,306 points to end at 55,669 after the surprise rate hike by the RBI, while Nifty tanked 391.50 points to 16,677. So why did the RBI hike repo rate? A couple of things that Governor Shaktikanta Das pointed out. One is inflation. He also spoke about what's happening in Ukraine and what's happening because of the pandemic and the supply chain disruptions, all of which led to increase in food and fuel prices, and that in turn led to inflation, which is why the RBI had to hike repo rate at this point. But what really is inflation? Inflation is the rate of increase in prices over a given period of time, and we can't really talk about inflation without talking about fuel prices, because it has a direct impact on what's really going on. In the last 1 month or so, we've seen consistent increase in fuel prices in India, especially after elections, because there was a pause from November till March 22nd. But after that, fuel prices have gone up. And how? If you can take a look at the chart on your screens right now, you'll see that in April alone, the fuel prices were increased by 10 rupees. In Delhi, petrol costs about 105.41 rupees per litre. Diesel costs 96.67 rupees per litre. In Mumbai, prices have touched the 120 rupee mark for petrol. In Chennai and Kolkata, prices are well above the 110 rupee mark for petrol as well. Now, this is extremely significant because fuel is used for the transportation of most goods across the country, and rise in fuel prices means rise in commodities. Like you have prices of fruits, vegetables, milk, all of which also went up. Now, what has the government said so far? The government in April said that global crude oil prices is one of the reasons, and hence India's price rise is only 5% when compared to other countries who've increased far more than what India has increased. But this is only part of the story, because global crude oil prices affect the pump prices, no doubt. And India imports about 85% of its oil, which is then refined by domestic oil marketing companies and sold at pumps. So that is one factor. But the other point that is also extremely important is the taxes that the state governments and the central governments levy on petrol and diesel. If you take a look at the chart right now, this is as of 1st May 2022. Here's the price breakup for petrol in Delhi. Base price is only 56.36 rupees. The rest of it, which is excise duty, value-added tax, dealer commission, all of which then goes up, takes the entire price up to 105.41 rupees. So half of it is central and state government taxes. Now, to be fair, some of the states did reduce value-added tax, but then there was a blame game between the BJP and the Congress and the opposition even there. Now, between March 2014 and October 2021, and this is significant data from the Observer Research Foundation, the government imposed tax on petrol rose by more than 200%, and that on diesel by more than 600%. And this is according to a report by the ORF. Now, What resulted subsequently is a 17-month high for retail inflation. It was at 6.95% in March, much above the upper tolerance level of the Reserve Bank, according to the government data. Now, this is the third consecutive month that the consumer price index based inflation remained above the 6% mark. Now, to try and contain inflation, the other thing that the RBI has done is hiked the cash reserve ratio by 50 basis points. Now, a repo rate hike essentially means that EMIs are going to go up, and this is a direct impact for home loan borrowers, especially because interest rate on loans will begin moving, considering banks are now also going to increase their lending rates. A couple of banks have already done that. For instance, HDFC has raised interest rate on home loans by 30 basis points effective May 9th. ICICI Bank and Bank of Baroda have also done that, and more banks are expected to follow. Now, in case of floating rate home loans, which is what a lot of people have, this hike is going to be immediate, considering all floating rate home loans taken after October 1st, 2019 are linked to an external benchmark as per the RBI's mandate, and one of the external benchmarks is the repo rate. So if there is a repo rate hike, that means that the EMIs will also go up, considering it's a floating rate home loan, and that hike is immediate. But depositors are set to gain, because when you have a deposit, that means that the bank is paying you that interest rate, and now a couple of banks have already started increasing their interest rates on fresh deposits, which means savers will gain. For instance, Kotak Mahindra Bank, Janas, a small finance bank, ICICI Bank, Bank of Baroda have already done that, and more banks are set to follow to try and increase the interest rate on fresh deposits as well. However, any existing contractual deposits such as bank term deposits or recurring deposits, the rate is not going to change. That begs the question, are we staring at another hike? Now, we know that the next monetary policy meeting is in June. According to reports, retail inflation data for April, which is not out yet, will really determine what's going to happen in that June meeting. Now, Reserve Bank of India Governor Shaktikanta Das pointed towards an elevated retail inflation in May. However, he did not put a number to it. Now, several reports quoting economists are saying that that number is likely to be much higher than what we saw in March. Now, that brings us to the end of this explainer. I hope you found this information helpful. Do like, share, and subscribe to our channel, and share our videos so it reaches more people. And if you want more such explainers, do tell us what you would like to see on this channel, and we will make sure that we bring them to you as well. Thanks so much for watching.